Hello traders, welcome to the video. In this video, I'll be showing you a very quick strategy that you can use to scalp the volatility index market. All you need to do is to go back on your chart and backtest this strategy. So first thing we want to do is to set up our chart. Click on this indicator icon over here. As you can see, I have just 5 indicators: moving average, relative strength index, moving averages, and awesome oscillator. To set up the first moving average, click on the F icon on the main chart. Moving average, make your period to be 15, shift to be 1, method to be simple, apply to close. For the styles, make it color of your choice, select picture of your choice. After that, click on save. For the second indicator, which is the relative strength index, click on the F icon on indicators Windows 1. Scroll down a bit. Relative strength index, make your period to be 1, apply to close. For the levels, click on this pen icon, add level, type 10, 90, 15, and 85. For the styles, make it color of your choice and make it 3 pixel. After that, you click on save. The next indicator is the moving average. To select that, click on the F icon on indicators Windows 1. Moving average, make your period to be 5, shift to be 1, method to be simple, apply to close. For the style, make it color of your choice and make it 3 pixel. After that, click on save. For the next moving average, click on the F icon on indicators Windows 1 again. Moving average, make your period to be 12, shift to be 0, method to be simple, apply to close. For the style, make it color of your choice, make it 3 pixel and click on save. For the last indicator, which is awesome oscillator, click on the F icon on indicators Windows 1. Make the style to be color of your choice. After that, click on save. So if you follow my settings correctly, your chart will look exactly as what you see over here. So first thing we want to do is to set up our zoom level. Let's say this is the innermost zoom. So you want to zoom in just 2 times. 1, 2. So this is the best zoom level for this strategy. First thing you want to do is to go to your higher time frame, which is the 1 hour time frame, and determine the direction of the market. So if you see that the higher time frame, which is the 1 hour time frame, is in an uptrend, you only look to buy from these entry points, which is the 15 and the 10 level. And if you see that the 1 hour time frame is in a downtrend, that is, if it is going below this moving average, then you want to pay attention to this up level 90 and 85 to sell markets to the downside. So first thing you want to see if you want to buy market to the upside, you want to see this awesome oscillator and this moving average enters into the 15 and the 10 level at the same time. Listen to what I say, at same time. So if it did not enter at same time, the strategy will not work. So you can see right here, they both enters at the same time. Once you have that, you want to draw out your structure on the main chart. If you look carefully, we have high, low, high, and a lower low. So you want to see market goes above this high. So once you have this goes above this high and it has gone above the moving average again, which is this black line, then you want to look for your buy. Your stop loss will be below here, and then you will target these areas to the left or any other areas that you have. But you can also wait until when market crosses the moving average to close your entry. Let me show you another way you can also enter this market. So this is another opportunity. First thing you want to pay attention to is this moving average, and this awesome oscillator enters into the 15 and the 10 level. So once you have that, you also pay attention to this awesome oscillator again. So you want to wait for it generating a green bar. So once you have the first green bar generated, you will enter your buy. Your stop loss will be below here. But this alone will not confirm your entry. Sometimes you will get late entries. So you can use high, low, high, low. When market goes above that point, bar generated above the awesome oscillator, the moving average have crosses. That is 3 confidences that is confirming to you that market is likely to go in an uptrend. Then you will target this high or any other high to the left. So you can see that immediately market take out this high, we have a little shopping market before it spikes to the upside again. So right here, the structures are not clear. So we can use 2 of our entry criteria to take this trade. We have this moving average and the awesome oscillator touches the 15 and 10 level at the same time, confirming the market is likely to reverse to the upside. Then you want to see the cross of this moving average. You have the cross here. Moving average goes below the candles. At the same time, you have the first green bar generated, but there is no structure here. You can still enter your buy, your stop loss below here, and you will target these highs to the left. So you can see the market sweep it before it reverses to the downside. So this will be a sell condition. Everything you are looking for the buy condition is opposite to the sell condition. So you want to see the moving average and this awesome oscillator enters into the 90 and the 85 level at the same time. So once you have its entry, then you want to wait for when the candles goes below the moving average. As you can see over here, you have the break below the moving average, and then we have structure low, high, low, high, low, high. Market breaks the structure here. At the same time, generates a down bar. You can see this down bar below this zero level of the awesome oscillator. So once you have that down bar generated, you enter your sell. Stop loss will be above here. Then you will target these lows to the left. So you can see that all the lows were later swept. So this is volatility 75. Everything we are looking for is the same as the volatility 25 examples that I've given. This is the 5 minutes time frame. So first thing you want to see is market drops to the downside, pushes this moving average and the awesome oscillator into the 15 and 10 level. Then you want to look for three things. 1, the moving average cross. 2, green bar generated. 3, market structure break. But out of these 3, you want to make sure that at least 2 is present to take your trades. You have a low, high, low, high, low, high, then a low. Then you want to see market goes above this break after you have the cross of the moving average. At the same time, you want to see generate green bar. All criteria are met in this condition. You enter your buy, stop loss below here, and you will target these highs to the left. So now once market sweep this high, then you have this break to the downside, the market continues to fall. So you want to see the awesome oscillator and the moving average pushes into the 90 and the 85 level. You have that over here. So once you have that, you want to look for 3 things: market structure shift, the moving average crossing, or the awesome oscillator green or red bar. So over here, market structure, we have a low, high, low, another high. We have the break of the low, we have the cross of the moving average, 2 conditions met. You have generation of the red bar to the downside. Then you will enter your sell. Your stop loss will be above here. Then you will target this lows to the left and see how market continues to fall to the downside. So basically, that is all I want to show you for this video. After this, I want you to go back on your chart and check to see for yourself. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.